everybody, and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, welcome back to YouTube, and we're going to be looking at gold and silver today. Now, I'm going to try and keep this brief. My voice is playing me up again a little bit. I've just finished recording an hour-long video on Ethereum and Bitcoin for the Patreon, and I'm still recovering from having laryngitis the week before, so you're going to have to bear with me. Might get a bit croaky and a bit hoarse at some point, but I'm just going to try and stick it out and do the best I can. So, gold. Well, it's a wonderful time to be a gold investor. It's been a wonderful time to be a gold investor for many years now, and it just keeps getting more wonderful. Now, I'm speaking from personal experience, but I know I'm not alone out there. I know a lot of gold bugs watch this, so good for you too. But the thing I want to just get across before we dig into all this Elliott wave stuff is things are getting kind of wacky at the moment. Putting it simply, as I speak to you, we're trading at 27.38 spot 90, right? Gold just keeps going higher. Now, that's no surprise to anyone who's a gold bug. I've been in gold for many a year, and I know it just keeps going up. It is broken up by some pretty heinous corrections throughout history. For example, we have one here from 1980 to 2000, 20 years long, blimey. And we've had some pretty big ones since. But long term, it do go up, and that's what it keeps doing. So, for me, as I've often expressed when talking about gold, it is not a trading option for me. I might trade the gold and silver ratio, but generally equities, crypto, commodities, bonds, that's what I'm interested in trading. Gold for me is a possession. It's something I want to hold over the very, very long term. I have a similar opinion to Bitcoin, but slightly different thesis, but a similar opinion. It's something I want to hold over the long term because I'd rather hold it than the money that I could have used to buy it. I'd rather hold the gold, and as a result, I've been rewarded because the gold is more valuable than the money that was used to purchase it last year, the year before, the decade before, the century before. And I have no reason to believe that that won't be the case going into the future. So for me, it's a long-term hold, but I need to warn you that things are getting a bit crazy. So what do I mean? Well, we're approaching levels on the MACD here, which we've only seen once before. Okay, that was back in 2011, September 2011. Right, we are approaching oversold conditions, which we see rarely on the weekly time frame, and not for very long when we get there. Okay, on the monthly time frame, it's an even different story. Momentum expands to rate that never have been witnessed before. The average line is higher, having passed through a signal which is dragging it to new highs, and the histogram is more bullish than it's ever been. We are pushing new extremes here in the MACD. We are overbought on the monthly time frame at levels we've very rarely seen in the past, not since the 1980s, since the 1980 peak. Right? So we are very extreme in gold at the moment. Now, it doesn't mean we can't continue to push higher. Of course we can. We might do so. But I'm just giving you a warning that some kind of slowdown, consolidation, sell-off, sideways, collapse, whatever you want to think of it. It could be minor, it could be major, is on the cards in the future and not too far from now. I don't know exactly when. Will I be selling? No, I will never sell. I will see any future downside in gold as a potential opportunity to accumulate more. But anyway, I digress. I just wanted to start with that just to give you a bit of a heads up about the current situation. But we will now come into the actual count. I have a couple of ideas. Primary count is where we're going to start. And that is here. A simple long-term count. No, I'll turn that off actually. So 1 into 2, 3 into 4, and we're now into a 5th at primary degree. The 5th at primary degree is looking to complete a cycle wave 1 within super cycle wave 3 within grand super cycle wave 3. This chart goes back to the 1800s, bear in mind. Now what does that mean? Well, let's come into the 8 hour and try and explain it. So most recent longer, larger correction we had was the top of the primary wave 3, as I have it, starting in August 2020 and finishing in November 22. Right, a little over 2 years of going sideways. The next largest correction we have is the intermediate wave 1 into intermediate wave 2. The largest correction is wave 2, and that is 1 degree less, I've got it as, and that is intermediate 3 we're now in of primary 5, okay, of cycle 1. of super cycle 3, of grand super cycle 3, so on and so forth. Now we then have another correction of 1 into 2, okay, at minor degree, and this is now an Elliott channel that I'm projecting, because I now feel that wave 3 into 4 is now in. So what we can do with this Elliott wave channel is, I'll tell you what, we'll use a fresh application, and we'll go from the 3 to the 4, and we'll project using the second methodology another Elliott channel here. As you can see, it's accelerating. So typical behavior: wave 1, wave 2. The two lows projected from the 1. Here's our base channel from the swing high. Right. Wave 3 should now break that base channel, which it is, and continue significantly beyond it, which it is. It will likely top out and come back to it, and then move higher in a fifth. These are the bits which haven't happened yet. So what I'm really interested in doing is looking at the extension for this wave 3. Here's a 1 into 2, we're in the 3. And we are gone past the 1618. We are short of the 2618, which may be the target, around $3,000 gold. It's a nice round figure. It's a nice psychological figure. Right? And that could be our wave 3 high. I'm not saying it is, but it could be. When we come down to the smaller time frame, this is the best I can make of it at the moment. We've gone minor 1, 2, minor 3, 4, and we're getting an extended fifth. Now we could be within minor 3. That's a possibility also, but I've had trouble making sense of it. Now, since we've broken out, it appears to be much clearer as an impulse. And we've gone 1, 2 minute degree, 1, 2 sub-minuet degree, 1, 2 minute degree, 1, 2 minuet degree, 1, 2 sub-minuet degree, 3, 4 sub-minuet degree, and now looking for minuet 3 into minuet 4, into minuet 5, into minute 3, minute 4, minute 5, minor 5, intermediate 3, and then the big intermediate 4 correction. So as I have it, we've still got a ways to go. Now I could be wrong and it could top out any day. We've seen how extreme the conditions are, but we could keep running for a while yet. And I think 3 grand is not an unreasonable target, but we might get there in this move. We may have to wait after a correction to get there higher later. But that's the best I've got at the moment. Now the alternative explanation we've just come out with is the idea that it's in. I'm just going to put that back into that folder. Excuse me. The idea that we're not in a wave 5. And this is the idea that we're in a wave 3. So how do we express this? Well, come back. We're going to have to come back to the lows of 2016. And instead of looking at the pivot here in August 20 into the lows of 22 as wave 4, we instead view this as wave 1 into wave 2. This correction is wave 2 at primary degree. And the reason momentum's going loopy and we're going vertical like Maverick in the first Top Gun movie is because we are heading in a wave 3, and that's why we're going so violently higher and so quickly. Right? So this could be the possibility as well, in which case we have a primary wave 3 that we're working on, intermediate degree currently. We're still going to get that intermediate 4 correction before swinging higher. So we are going to have to call off for sooner or later, but this is even more bullish. It's even more bullish over the long term. Right, now, I'm not going to bother talking about targets yet. It's too early days. If this turns out to be true, I want to see how the count plays out. Alright, but this is the alternate idea. Now, a quick look at the long-term count. Okay, so the long-term count, I've got this. Let's just put it into log so we can see more clearly. I've got the current count. As I said, this is based off of a primary, that we're in a primary wave 5. Extended wave 5s in the commodities market are very common. Okay, more common than they are anywhere else. So the fifth being the strongest, most blow off wave makes sense here. That's my primary count. We're coming up in the 5th to find a cycle wave 1 eventually in the future. Weeks, months, maybe even years away, but it's coming. Right? A big correction will follow. Okay, at cycle wave degree. But over the longer term, the 20-year correction from 1980 to 2000, that was grand super cycle degree. That's the only biggest correction we have on the chart to label, 20 years long. We then have super cycle, eventually we're in cycle, and then we'll progress into primary, intermediate, and so on forth within the 3 of the 3 of the 3 of the 3 at grand super cycle degree. So in other words, My kids will be the ones worrying about what to do with the gold. By then, I'll be long gone. And you'll probably be long gone. Because we're talking multiple decades and even centuries by the time we get that far along this process. That's how long I think gold's going to be with us, if not indefinitely. There's no reason to think it won't be. Right, the debt problems we've got at the moment, the issue, our irresponsibility as human beings, our unwillingness to manage money correctly and debt correctly, and to stop diluting currency supply and money supply, we have never been able to not do that. It's just what we do. It doesn't matter whether it's the current US government or the Western world today, or whether it's Emperor Diocletian thousands of years ago in ancient Rome. It's just what we do. Okay, and gold has been something worth betting on for thousands of years, and I'm going to continue to bet on it for the short time that I'm here for. So there you go, nice bullish thesis on gold. We're still going higher. We will top out sooner or later, and we will correct sooner or later. Things are getting loopy, all right, but in the long term it's nothing to worry about. If you'd rather hold the gold than hold the paper money, it will be an opportunity. If you're trading this stuff, that's your problem. You deal with that on the shorter term. I'll trade equities, bonds, I'll trade cryptos, but I'm not interested in trading my gold. The only thing I trade in gold is the ratio between gold and silver, and that's got its own problems, which I'll talk about in a minute. So let's come over and have a look at silver, shall we? So silver refuses to play ball in the same way as gold. It is breaking out and it is lagging. Now, if it's doing the same thing as gold, which I don't think it's doing the exact same thing, because it isn't, but if it's doing something very similar to gold, then it is very, very far behind in the process. Very far behind. Now, this isn't uncommon. Historically, people go out and buy gold. Gold gets too expensive and they look around for the next thing to buy, and they realise that silver's at an enormous discount, so they buy silver. Silver chases to catch up, gold stops. Okay, we might get the same again. So in my primary count, we're just going to bring up the long-term count. On the primary count, we bottomed in March 2020 during COVID. We have put in a base channel off of the low. Now we're looking at the chart in linear here. We've gone into the first high and the first low. We've projected from the two lows, from the swing high forward to get our base channel. This is primary 1 into primary 2. This is a significant correction from August 2020 to September 22. 2 years going sideways. The next move is to breach this channel. So we go up to 1, we come back in 2. We breach in 3, we come back in 4. We don't always have to come back to the channel, but it's quite common. And then we move up in 5. And that's exactly what I'm expecting to happen. Here's the 3, I put it over here. I would never really place these in the hope of being anywhere near right. It's just a projection. But there you go. And this will eventually complete cycle wave 3, where maybe a blow off 5th within the 3, then the 4, then the 5. So multiple years and decades ahead. Right. But that's essentially what I'm expecting to happen. Now on a shorter time frame, when we come in here, we can see so far I've got 2 ideas. I've got 1 into 2 at intermediate degrees complete, and then we have another swing into a 1, 1, 2, 3, 4, 5, 1 into 2 at minor degrees complete, and now we're marching higher in minor 3 of intermediate 3. So if this is the case, we will continue to blow up and go higher in validation at 18.97. I think it would be unreasonable to assume that we were still in a smaller wave degree, wave 1, long before we get to that low. So what I'm going to do is assume that the minor wave 2 is in. I'm going to put an invalidation point here at the minor 2 instead, and move below this would invalidate that instead. So there's 24.25, and we'll just put that into the primary count, and now we're progressing in a wave 3. So we've got 1, 2, 1, 2, 1, 2, chasing gold, which is completed primary 4 and is now in primary 5. We're only just going into primary 3, and we haven't even breached the bloody base channel yet. We've got a long way to go. So if this is the case, $50 and then 3-digit silver is on the cards, and is an inevitability if this is correct. Can't tell you when, in the future. Not too distant for the 50, maybe a bit more distant for the 3-digit, but either way it's coming eventually if this is correct. That's one idea. Next idea is alternate bullish. And this is the idea that we've had... oh, wait a second. Is that the correct one? No, that's the same idea. Excuse me. Here we go. Alternate bullish extension. So instead of saying that we've had 1, 2, 1, 2, and now into 3 of the 3, what if we've had instead 1, 2, 3, 4, and are now in the 5th? We'll get a 1, and then we'll get a deep correction again. Alright, and then we'll get, so 1, 2, 1, 2, and then we'll breach the base channel and go higher. So if this is the case, that invalidation point at 24.25 will break. We'll come down through 24.25 and we'll be moving lower. If we're moving lower, at that point I would dump the primary count and adopt this instead and assume that we've gone 1, 2, 1, 2, and that's why we're going lower. At that point, the invalidation count point would be all the way back here. Okay, at the beginning of that wave 1. So I'll just add that to the count. That's close enough. Okay, it's unlikely to occur, so it's close enough. And there's essentially my two ideas. I'm just trying to think. Do I have a bearish idea? If the price breaks down, I'm not saying I won't cover it. If the price breaks down violently and undoes this uptrend, because it is a high, a low, a higher high so far, if that reverts and we take out that invalidation point at 16.21, which is a long way away, that invalidates all bullish counts. Before we get anywhere near that happening, I will come back to you with a bearish count and share that. In the meantime, I want to see eventually this correction occur in the precious metals, in gold and silver, and it will give us a much clearer idea of what we're dealing with. Because, like I said, things are getting a bit crazy. Things are getting a bit loopy. But they could get a lot more loopy. It's always possible. So, in the smaller time frame, let's just come in on the smaller time frame. Minor wave 2 complete. Minute wave 2 complete. Sub-minute wave 2 complete. Microwave 1 and 2. Microwave 3 and 4. Now into looking for the top of sub-minute 3, 4, 3, 4, 1. We're going to get another 1, 2 is what I'm saying. Eventually. So it's going to be... Because this is the most common structure in Elliott waves. So when people go, oh, it's just 1, 2, 1, 2 for days, Tom, you're always doing that. Yeah, it's because it's the most common structure in Elliott wave, mate. Why is it the most common structure? Because the wave 3 is the most likely wave to be extended at all wave degrees. At every wave degree, the wave 3 is the highest probability extension, more so than the 5 or the 1. So if we're ever building a wave 3, and we're building it at multiple wave degrees, 1, 2, 1, 2, 1, 2, 1, 2 is the most common occurrence. If you don't believe me, go and study long-term charts in equities, commodities, wherever you like, and you'll find that pattern written large across charts. You might need to go into logarithmic scale to find it, but it's everywhere. It's literally everywhere. Okay, so when people go, oh, it's just 1, 2 forever, he never wants to label 3, 4. I do, and I have done in gold, and I have done in Bitcoin, and I have done in other places. I'm just saying it's the most common structure. Anyway, I sound awfully bloody defensive, don't I? Either way, we haven't even broken the base channel. That's the point. If we're anything other than corrective, and we're bullish, we've got to do that. We've got to go 1, 2, and we've got to get out of this thing. Right? Which means if we're looking for a sensible wave 3 target, we're heading for $50 at least before we even get to a wave 3. Okay, it may be a little lower on a 1618, but I think 2618 would be more reasonable. And then you've got 4, and then you've got 5. So we've got many, many months ahead of us. Of silver just racing to try and catch up with gold. Okay, and that's essentially where I see we are now. We can tell that we're much earlier on. I'm not certain that we are. It's just an idea. We can tell that we're much earlier on because we are not getting the same weekly, monthly readings that we are in gold. Momentum, relatively, on the weekly time frame is well below prior highs. It's still strong, but it's well below where gold is. All right. RSI is well below where gold is on the weekly time frame. On the monthly time frame, we are overbought, admittedly. Okay, so we need to be aware of that in silver as well. That's why it could be that 1 into 2. Monthly time frame, we're well below momentum though, where we've been in the past. Gold is setting new records in momentum. Silver is miles away from doing it. Okay, so still looks like early days to me. in silver. Looks like a giant 1 from the GFC into a 2 into 2020, into a 1 into a 2, and so on and so forth as we build this gigantic bull market in silver. Now, suffice to say, the bearish idea, which I'll come back into more detail, would be that it was a move down, it was a move back, and it'll be another move down. And that's it, simple as. And that's probably the only way that Tom is ever going to get to buy silver physically without the stupid freaking premiums on it. Because for me, ever since I got into silver back in 2013 onwards, and more so during 2016 through to 19, post-COVID, buying silver physically is an insane person's proposition. Because the premiums are disgusting. Absolutely disgusting. So it's been a paper trade, right? You trade the ETFs, right? Gold, different matter. The premiums are nowhere near as bad. Silver's just been absolutely grotesque. You end up paying 80% over the odds. You got to break it. You got to make 100% on top of VAT if you're buying in the UK before you even break even. So forget that. That's out the window now, unfortunately. But you can own the ETFs, you can sell that, any physical silver you've got, you can hold for the long term, you can trade it out into gold when the ratio gets closer, if that's what you want to do, or you can just sit on the stuff. Either way, right, if this long-term this long-term thesis is correct, it's going to the moon. And that's it, guys. So thank you very much for joining me on this video for gold and silver. If you're new to the channel, you like what you've seen, feel free to subscribe, smash the like, and hit the little bell notification icon to remain informed of future video releases. And if you're interested in joining the Patreon and getting access to the Elliott Wave video series, plus weekly live streams, plus weekly exclusive content for the patron, like the Ethereum and Bitcoin video I've just loaded up, feel free to click on the link below, head over and join the Patreon. And if you're not following me on Twitter yet, there's a link in the description box below. Click on that and follow us on Twitter as well. And yeah, take care of yourselves, guys. That'll be it for the week now here on YouTube, and I'll be back with you next week. All the best. Bye-bye.